Good afternoon, viewers. Now let's look into this section, financial reporting or basic financial accounting for ACCA F3. And I'm picking some revision kit questions which is recently released. And the very first chapter, the context and purpose of financial reporting. Now let's go through the questions one by one. So these questions here, the first question is, who issues international financial let me make it like this. Who issues international financial reporting standards? Now, these standards are issued by whom? That's the question. Now, we have four options. The first one, the IFRS Advisory Committee. The second one, the Stock Exchange. Third one, International Accounting Standards Board. And the fourth one is the government. Now, we have some obvious answers which are not the correct answers here. Let's analyze that. So, yeah. See here, the government. Government, they got nothing to do with issuing financial reporting standards. As well, the stock exchange, these two entities or these two bodies, they have no job of issuing financial reporting standards. So D is wrong and B is wrong. On the other hand, the advisory committee, the IFRS advisory committee, they are part of IASB, but they don't issue financial reporting standards. Rather, they advise on the development and progress of accounting practice within the body. So therefore, this is also wrong. So the correct answer will be here, C. So answer number 1.1 answer is C. 1.2. Which groups of people are most likely to be interested in the financial statements of a sole trader? Now, here you need to look the word, it is missing here, sole trader. Now, that is a very important word. Remember that our answer to selection should be based on this word. Shareholders of the company, no, because sole trader there is no shareholders. So answer 1 must be wrong. If answer 1 is wrong, A is wrong and D is wrong. This is the process known as elimination process. So we eliminate A and D. And we are left with B and C. The business bank manager. Yes, we need them to be interested in the financial statements of a sole trader, as well the tax authorities also yes, and the finance analyst. So answer will be C. Here the answer is C. So the third one, let me make the screen big. I'm picking the question again. Yeah, this is the question here. In this, okay, the third one, they have given two different statements, and we need to choose which one is true or false, any of these statements. Whether given statement is either true or false. That's what we need to see. A supplier of goods on credit is interested only in the statement of financial position. So what is financial position? SOFP. In our previous time words, it is balance sheet. So this statement says that the supplier is only interested in the balance. What is balance sheet or statement of financial position? Are the statements showing the balances of any business on a particular given date. So the accounts payable will be there. So obviously, yes, supplier will be interested to know that, but whether that is the only thing he is interested, no. He will also be interested to learn about the purchases the company has made with him. So this answer is not true, it is false. The objective of financial statement is to provide information about the financial position, performance, and changes in financial position of an entity that is useful to a wide range of users in making economic decisions. That is obviously correct. So 1.3 answer is that. And 1.4, which of the following are advantages of taking as a limited liability company? Advantages of trading as a limited liability company. Operating as a limited liability company makes raising finance easier because additional shares can be issued to raise additional cash. Yes, that's a correct statement. Because if your business nature or structure is a limited liability company in a legal manner, then if you need, you can issue additional shares subject to the permission in the articles of association. So therefore, this is a correct statement. Operating as a limited liability company is more risky than operating as a sole trader because the shareholders of a business are liable for all the debts of the business, whereas the sole trader is only liable for the debts up to the amount he has invested. Actually, this is the opposite of that is correct. What do we mean by opposite of that? The sole trader's liability is unlimited. He has to pay or any debts, this regardless of taking his personal property and funds. Whereas shareholder, limited liability company, their liabilities are limited to the extent of any unpaid shares. So therefore, this is statement number 2 is wrong. So accordingly, A is the only correct answer. So this is question number 1.4. Let's move to question number 1.5. Okay, now I can move on. Right. So this is question number 1.5. Let me make the screen editable for me to write. Fine. That's now editable. Yes. Good. Which of the following best describes corporate governance? So, corporate governance is the system of rules and regulations surrounding finance reporting. No, what is corporate governance is the best practice a person or an organization must follow in performing certain activities. So, therefore, it is not that something to do with financial reporting. So, so this is wrong. A is wrong. B, identify which of the following statements are true. Sorry, the B, corporate governance is the system by which companies and other entities are directed and controlled. Obviously, that is the straightforward definition of the corporate governance. So that is the answer. Corporate governance is centered or carried out by the finance department in preparing the financial statement. No, that's wrong. And corporate governance is the system by which an entity monitors its impact on the natural environment. No, that's also wrong. So answer here, corporate governance is the system by which companies and other entities are directed and controlled. So 1.5 answer is B. Here, B is the answer. Now we will go to question number 1.6. Identify which of the following statements are true. The directors of a company are ultimately responsible for Directors of a company are ultimately responsible for the preparation of financial statement, even if the majority of the work on them is performed by the financial people. Obviously, yes. According to IAS 1, International Accounting Standard, presentation of financial statement, the responsibility of the preparation and presentation of financial statement is lies with directors, not with any other. So 1 is the compulsory answer. So B is wrong as well, C is wrong. And let's see whether the third answer is correct or not. I don't need to read the number 2 because both B and C are wrong. There are generally no laws surrounding the duties of directors in managing the affairs of a company. No, there are rules governing the duties of directors, which you can find it in articles of association. So answer must be A only. So this is the correct answer. The rest of them are wrong. That is 1.6. And 1.7, which one of the following statement is correctly describes the contents of a statement of financial position? A list of ledger balances shown in debit and credit columns? No, that is actually they are referring to trial balance. The first one is trial balance. List of all the assets owned and all the liabilities owned by a business. Let's hold for a moment, see whether any other appropriate answers are there. A record of income generated and expenditure incurred? No, this is P&L. A record of the amount of cash generated and used now. This is cash flow. So answer is B. They are referring to list of all the assets owned and all the liabilities owed by a business. So that is 1.7. Now 1.8. Which one of the following statements correctly describes the contents of the statement of profit or loss? So 1.8, list of ledger balances shown. No, that is again a similar question. That is TB, trial balance. List of all the assets. No, that is balance sheet or statement of financial position. A record of income and expenditure incurred over a given period. So that is the answer actually. So I have given the previous one. So actually 1.8 answer is C. Right? So here B. 1.7 answer is B. 1.8 answer is C. And then which of the following are true of partnerships? So that is 1.9. The partner's individual exposure to debt is limited. No, that's not correct. So one has to be wrong. If one is wrong, then this is wrong and B is wrong. So it has to be either B or C. Let's read financial statement for the partnership by law must be produced and no. There's no requirement for the partnership financial statement to be published. So therefore that is wrong. So answer must be 3. So answer is this. Partnership is not a separate legal entity from the partners themselves. Obviously, yes, that's correct. So let's save this and we'll move on to the next one. So 1.9 is done. Let's move on to 1.10. This one. Let me make it editable. so that I can write it down something. Okay. Which of the following statements are true? Is or are true? So directors of companies have a duty of care to show reasonable competence in their management of affairs of a company. Yes. So the directors should have that reasonable, duty. That duty must be there. Directors of companies have a duty of care to show reasonable competence. Obviously, yes, they must have the duty of care in order to manage the business. So it is a reasonable competence. So that's a correct answer. So answer number one is correct. If answer number one is correct, then B is wrong. So compare. We need to compare the others. Directors of companies must act honestly in what they consider to be the best interest of the company. So that is, directors of companies must act honestly in what they consider to be the best interest of the company. So that is also what I mean. We have to look into that. So that is correct. Obviously, yes. So because they have to look into the best interest in an honest way. So answer number two is correct. So if answer number two is correct, so D is wrong. D is wrong. So we are left with two more options, A or C. A director's main and aim should be to create wealth for the shareholders of the company. Obviously, yes. That, see, there is something called principal agency theory. According to that, the agents are the directors should work for the best interest of the principal by enhancing the value of the shareholders. Wealth can be created in two ways. One, increasing share price of the company, or two, paying increased amount of dividends. So therefore, answer C is correct. 1.11. Which of the following statement is true? The IFRS Interpretation Committee is a form for the International Accounting Standards Board to consult with outside world. The IFRS Interpretation Committee, no, they don't consult outside world. Rather, they provide interpretations of the financial reporting standards which has been developed by IASB. So therefore, answer one is wrong. So that is wrong. Then what about two? The IFRS Foundation produces IFRS. No, IASB produces IFRS. Two is wrong. So therefore, answer must be D. So that is the answer. One of the objectives of IFRS Foundation is to bring about convergence, of national accounting standards and IFRS. Obviously, that's correct, because when any other countries, like you can talk about US, Sri Lanka, India, Pakistan, if they have their own accounting standards body, now what the IFRS will tend to do, they will create a relationship and to bring about the convergence and to have only one single reporting standards. So accordingly, the 1.1 answer is D. What is the role of the International Accounting Standards Board? So that is obviously formulate international financial reporting standards. So you could straight away take the answer, that is B. The IASB main job is to develop IFRS. And 1.13, which one of the following is not an objective of IFRS Foundation? So 1.13, we need to find out which one of the following is not. So the one that is not, we need to find it out. Through the International Accounting Standards Board, develop a single set of globally accepted international financial reporting standards. That is one of the objective. Promote the use and rigorous application of international financial reporting is another objective. Ensure IFRS focus primarily on the needs of the global multinational. Oh no, that's not the objective. So answer is C. And which one of the following, that's now one, that 1.13 answer is C, 1.14. Which one of the following statements correctly describes how international financial reporting standards should be used? So, to provide examples of best financial reporting practice for national bodies who develop their own requirements, to ensure high ethical standards are maintained by financial reporting professionals internationally, to facilitate the enforcement of a single set of global financial reporting standards, and finally, to prevent national bodies from developing their own financial reporting standards. Let's again go through this. The correct answer will be here. Now we need to find out which one of the following statements correctly describes how international financial reporting standards should be used. Obviously, to provide examples of best financial reporting practice for national bodies who develop their own requirements. Answer is A. Anyway, thank you very much for watching this video, and keep share, subscribe and like our videos so that you will be benefited with different related video to videos in our YouTube channel. Thank you very much.